Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 23. This road to 100k in realized returns challenge, and this trading day has been pretty much a continuation of last Friday. So the indexes and the market continue its downhill trajectory, especially at the beginning of the session. The falls or the losses were quite acute. However, it has alleviated a little bit as the session progressed, and given that situation, there is not much that we can do at this point. Our biggest holding, which are these 300 shares of the ETF, the QQQ, which were, as you recall, were acquired at a price of $536 each share. And as you can see right here, well, at this point the day is almost over as we speak, but the option chain is completely unavailable at this point for this type of prices. There are no calls available to be sold because nobody is buying them, available to buy them for these types of prices. And even for the next day, even if we were willing to use a 2-day call option, as you can see here, the premiums are pretty much meaningless, and so given the situation, I decided to stay put. We're not going to do anything at this point. We'll just wait and see what's going to happen to the market in the next few days. However, as far as we can tell, up until this point, the so-called Santa Claus rally or Christmas rally or New Year's Eve rally that was expected, given the past records and past history of the stock market at this time of the year, has simply not materialized this year. And so because of that, when it comes to selling options on this particular asset or security, we're not going to do that because there are simply no options for us to trade, no feasible options for us to trade at this point. When it comes to our other holdings, as you recall, we had already sold 37 contracts, call contracts on force. So at this point, probably we could already, at this point, not yet, because they are not yet available to buy back at 1 cent. But nonetheless, it makes no sense for us to buy those back. We already are exposed, or we are already using these shares as a collateral, and if we buy back the position, simply there are no other options for us to sell back. And we must consider also the fact that it's going to be quite expensive to close down this position, because you're going to have to pay $37. All right, so keep in mind, we received 111, give or take. We paid 25 in commissions, 26, so that gives us something in the ballpark, as you can see right here, something on the ballpark of 85, 90, so $85. So we would have to pay probably another 25, 30 in fees, so that would bring us our profit to 55 or 60, and then we would have to pay $37 more to buy those contracts back at 1 cent. So our profit would be severely reduced if we do that. So there's no reason for us to buy the calls back. The only reason we would do this is when it's close to expiration, if the price would be hovering around 10.35, 10.40, and if we buy these calls back at 1 cent, of course we will do that, because with a potential price at 1035, 1040, it would be already above our our average price, our cost basis for the shares. So we would simply buy these calls back to release the collateral. The shares are being used as a collateral, and then we simply outright sell the shares. But of course, this is kind of an unlikely scenario given the situation of the market at this point. And of course, given the fact that as prices rise, the puts gain value, so it's much less likely that they would be at with a price of 1 cent. The only way it would possibly happen if is very, very, very close to maturity, and even though they are at 1035, 1040, they would not reach the strike price, and so yeah, that would only occur very, very close to the end of its life, of its maturity. But the way things stand, and given the fact that the prices are the price of 4 is taking a beating at this point, is down 1.30%. We just went ahead and we placed in an order to buy 500 more shares at the price of 9.80, which is still up. So the price did not reach in this session. The share price did not reach 9.80 at this point so far in the day. It went pretty close, as you can see right here. It even hit around 9.82, but it did not reach the necessary price, which was 9.80, for us to buy the shares. So the order is still up, and the way it is looking, it's not gonna reach that price anymore today. It can happen tomorrow, but we'll have to wait and see. But yeah, we are simply trying to take advantage of the market as it is right now, because if the prices are falling, we just try to do our best to lower our cost base even further. So yeah, when it comes a rebound, we simply get rid of all the shares in one fell swoop. Lastly, Pfizer, yeah, the prices are falling, so it's even less possible to sell any calls at the price of acquisition with a strike price of 28.50. They are simply unavailable, and even if we use a 2-week option, they are not even available, and we would have to go much further into the future to be able to get some sort of premium. This one, yeah, but this is a 3-week call option, 4 cents with a strike price of 28.50. We could potentially use this buying power we have left. Instead of buying 4 shares, we could potentially sell puts, and this would allow us to sell 2 put contracts on Pfizer with a strike price, for example, 25.50. But I would rather use the cash to bring the cost basis of Ford Motor Company further down, because Ford Motor Company is not as good as a company as Pfizer. I would rather keep Pfizer for a little bit longer because it's a very good stock, and it's way better than Ford Motor Company. So I will try to put all the chips in, so to speak, to try to get rid of Ford Motor Company first, and so that's why I'm devoting all the resources possible to try to get rid of that particular holding. And so Pfizer can wait for the time being, and so we'll have to see what happens, of course, over the next few days, and see what we can do about Pfizer. But for now, the priority is with Ford Motor Company. So that's it. We have nothing to add at this point to our scoreboard, and also yeah, the way things are going, this order, this buy order of 500 shares of Ford will not be filled because the price at this point is 9.91, so it's pretty much yeah, it's unachievable at this point, the 9.80 order price for us. So we'll just have to wait over the next few days and see what happens, see what more trades we can do. For the time being, this is all. Feel free to leave your comments and your questions in the comment section down below. I'm also available on LinkedIn in case you want to discuss any topics and make ask any questions privately. And of course, feel free to like the video and subscribe to the channel. And we will reconvene at the end of this week to see if any trades were available for us to do and see how those went. For the time being, this is all, and I wish you all a very, very, very successful 2025. And I'll see you in a few days' time.